Welcome, curious minds. Today, we're plunging into a debate that has absolutely captivated financial markets and sparked some truly passionate arguments. Gold versus Bitcoin. We're your guides through a really historic exchange between two titans, each with a very strong case for their chosen asset. And, well, what a fascinating discussion it is.
It really is. You know, both sides actually agree on the fundamental importance of sound money.
Right.
But their paths to achieving it just diverge dramatically. Our mission in this deep dive, really, is to unpack their core arguments, strip away some of the noise, maybe.
Let's get to the core.
And get to the critical insights you need to understand what's truly at stake here.
Okay, so our source material for this deep docs is an incredible transcript. It's from a debate featuring Michael Saylor, the CEO of MicroStrategy.
Yeah.
He's become, a true flag bearer for Bitcoin after making that really bold, headline-grabbing move, converting a chunk of his company's cash into crypto.
A significant chunk.
Yeah, and he entered this debate with a very clear mission, didn't he? He wanted to convince his opponent to sell gold and buy Bitcoin. Pretty direct.
Very direct. And on the other side, you've got Frank Giustra, a powerhouse in mining finance, kind of a modern Renaissance man, really, and a big philanthropist, too. He approached the debate with, well, he said an open mind, but he definitely wanted to challenge some of Saylor's more, let's say, aggressive claims.
Right. And highlight the risks.
And highlight the often unaddressed risks of Bitcoin. This is basically the battle between what the moderator called the cyber hornets and the gold bugs.
Yeah, okay, let's unpack this.
Let's do it.
So the debate really kicks off by establishing some common ground. Both Saylor and Giustra, they agree on sound money principles.
That's the baseline.
But Saylor, he quickly pivots into his philosophical framework, describing money not just, as exchange, but as a form of energy.
Exactly. Saylor views human civilization's progress through this lens of channeling energy, like from fire to aqueducts to electricity.
Yeah.
And he posits that money is the ultimate technology for storing and channeling that energy over time and space.
Interesting frame.
Then he introduces his concept of God coin, an ideal, infinitely divisible, instantly settling ledger.
Right, the perfect money.
For him, Bitcoin, with its hard cap of 21 million units, which breaks down into 21 quadrillion satoshis, its smallest parts and its efficient network, is the closest humanity has gotten to this perfect monetary system.
Wow.
He even claims Bitcoin grew to $1 trillion in just 12 years, faster than Google, Facebook, Amazon, or Apple.
That framing isn't just philosophical, is it? It's like the foundation for his whole investment case, suggesting Bitcoin has potential way beyond traditional assets. He's trying to redefine money itself.
Absolutely.
But Giustra immediately pushes back on this, well, almost utopian vision, doesn't he?
He does. He says, look, I have no problem with Bitcoin, thinks it's probably here to stay.
Okay.
But he fundamentally challenges its purpose and its claims to be a safe haven asset.
The safe haven claim.
And he uses that famous analogy, sometimes I dance around the living room in my underwear, but doesn't make me Madonna.
That definitely sticks with you, right?
It does.
Really cuts to his skepticism about Bitcoin's sort of self-proclaimed status.
Exactly. And Giustra theorizes that Saylor's constant bashing of gold is actually strategic.
Strategic how?
Well, designed to create a narrative that justifies a much higher Bitcoin price, maybe $500,000, maybe even $1 million.
Right, by capturing gold's market cap.
By convincing the world that gold's massive $12 trillion market value will effectively just, transfer over to Bitcoin.
A huge shift.
He sees it as a do-or-die strategy for Saylor,
Right.
But he cautions, look, we're only in the first season of this whole Game of Thrones, and there are significant unaddressed risks for Bitcoin that he thinks Saylor is just glossing over.
Okay, so that sets the stage. The first major point of contention then centers on asset comparisons, the ideal store of value, durability, portability, fungibility, all those things.
Elite attributes, yeah.
How does Saylor, the engineer, make his case for Bitcoin being superior here?
Well, Saylor frames it entirely from an engineer's point of view. He boldly calls Bitcoin the steel of the 21st century financial economy.
Steel, okay. Strong analogy.
He argues that gold, element 79, despite its history, has too many inherent monetary defects.
Such as?
It can be inflated, he says, through paper derivatives. It can be confiscated. It's immobile, basically, not easily divisible. And it can be counterfeited, especially with all the paper gold trading, sometimes like 100 to 1 against the physical stuff.
Right, the paper market issue.
Bitcoin, he counters, isn't just an asset. It's a global, decentralized, permissionless, immutable network and protocol.
More than just a thing.
Yeah. He calls it synthetic gold without the defects, highlighting features like being harder, meaning its scarcity holds up indefinitely, versus gold's sort of 30-year monetary half-life.
Okay, harder.
Smarter, faster, stronger.
Yeah.
Capable of billions of transactions at the speed of light. It's a tech solution for him.
So the engineer sees gold as fundamentally flawed, almost obsolete now.
Pretty much.
But Giustra, with his background in mining and finance, he has a totally different perspective on gold's enduring nature, right?
Completely different. He argues gold's like eternal nature and its deep cultural ties, especially in places like India and China, make it impossible to just dislodge.
Can't just engineer culture away.
Exactly. Giustra points out that central banks globally hold a staggering 33,000 tons of gold. That's about 20% of all the gold ever mined.
Wow.
And they are furiously buying more. A trend you just don't see with Bitcoin. Not at all.
Actions speak louder.
He stresses gold's stability as a store of value has been proven time and time again throughout history, unlike Bitcoin, which, crucially, has never been tested in a true financial crisis.
Right. It came after 2008.
Exactly. It was introduced after the big one. He argues gold is designed as a hedge against inflation, against equity downturns. It's not meant to moonshot in price.
Nutty versus spectacular.
And Giustra also highlights what he sees as Saylor talking out of both sides of his mouth, panicking people about M2 money growth, you know, the broad money supply and dollar devaluation.
The inflation fear.
Yet at the same time, claiming Bitcoin is not a threat to the US dollar.
Huh. How does that work?
Well, Giustra, coming from his sort of Machiavellian perspective, just doesn't buy it. He believes governments will simply not tolerate a global decentralized currency that could challenge their power.
The state monopoly on money?
Precisely. They won't allow it to become a real threat.
Now, there was that JP Morgan note in late 2020. Remember that?
Yeah.
Big shift. Bitcoin Trust inflows nearly $2 billion.
Right. Contrasted with gold ETF outflow.
Yeah, $7 billion out of gold ETFs. And JP Morgan predicted the trend would continue. But Giustra immediately expressed, well, deep distrust of Wall Street predictions, didn't he?
Oh, yeah. He basically said measuring a trend over just a few months is like throwing darts. Random chance.
Fair enough. It sounds like Giustra really sees governments as the ultimate sword of Damocles hanging over Bitcoin.
That's his core argument on risk, yeah. He asserts they'll go to extreme lengths to protect their monopoly on currency, especially if Bitcoin becomes a perceived threat.
What kind of lengths?
He lists various cuts that could damage or kill Bitcoin, legislation banning it, making it illegal for exchanges to accept fiat currency,
The on-off ramps?
sustained hacking of those on-off ramps, or even just using excuses like environmental impact, crime, national security to justify intervention.
Plausible deniability.
He claims governments will never allow Bitcoin to subsume the value of gold or the bond market. He calls that idea sheer insanity.
Wow. Strong words. But what's fascinating is how Saylor flips the script on risk. He argues gold itself carries inherent risks, even invites violence.
Saylor definitely doesn't pull punches there either, does he? He's really trying to dismantle that whole historical narrative of gold as the ultimate safe haven.
How does he do that?
He argues gold invites violence and points to historical confiscation. Cites numerous examples. Roman sieges, Roosevelt's gold seizure in 1933.
Right. Executive Order 6102.
Even Nixon abandoning the gold standard in 71. He claims gold's security, its transport, its audit costs, they just don't scale for billions of people. You need guns, concrete vaults, a big carbon footprint.
It's almost like he's saying gold's physical nature, its past strength, is now its biggest weakness in our digital age.
That's exactly his argument. It's a provocative reframing of risk, isn't it?
It really is.
Saylor, on the other hand, paints Bitcoin's security as effectively free, egalitarian, and unregulated, storing property in cyberspace where it theoretically cannot be seized by force.
So it encourages negotiation, not violence.
That's the idea. He argues Peter Thiel's comments about Bitcoin being a financial weapon were misinterpreted.
What does Saylor think it is?
He says Bitcoin will be the base layer for the 21st century fintech economy. foundational.
Okay.
He even suggests the U.S. dollar will be a big winner from Bitcoin's spread.
Wait, a winner? How?
Because weaker national currencies will collapse and people will adopt the dollar alongside Bitcoin in their mobile wallets. It becomes a parallel system.
Interesting. So coexistence, not replacement.
And Saylor believes that because Bitcoin is spreading so rapidly, he claimed it would be owned by more than half of U.S. voters by year-end. It will actually become politically popular, too popular to ban.
The network effect is political defense. Okay, let's talk performance. Bitcoin's price action is, well, undeniably its biggest strength on paper, appreciating over 200% a year historically.
The numbers are staggering.
But does this rapid rise, often fueled by FOMO, fear of missing out, make it pure speculation? And maybe, therefore, its biggest risk?
Well, Saylor contends that Bitcoin is actually becoming less risky as it matures.
Less risky? How?
He presents this striking statistical comparison. Over the last year, he said Bitcoin was up 693% versus gold's 4.66%.
Whoa.
With a much higher Sharpe ratio, too, meaning better risk-adjusted returns, supposedly.
Okay.
He claims that over a decade, Bitcoin averaged 190% annually versus gold's like 1.65%.
0.65 versus 190.
Yeah. And he even looks back a century. Says while gold seemingly went up 90x, maybe 95% of it was effectively confiscated or unusable as money at various points, making its real risk-adjusted return a mere 1.5% annually.
That's a very different calculation of gold's history.
It is. He concludes that choosing gold over Bitcoin in recent times would have been, quote, devastating, citing MicroStrategy's own decision as effectively a $4 billion choice.
Wow. Okay, that's Saylor's rocket ship narrative. But Giustra has real trouble with these calculations, right? Especially the short time frames and that, frankly, unbelievable 190% compounded annual growth rate.
He really does. He warns that figures like that are basically garbage in, garbage out, highly sensitive to your start and end dates.
Cherry picking.
Potentially. He says defining gold's value based on just 6 months or a year of trading is wildly inaccurate. And picking different one-year periods for Bitcoin over the last 4 years, you'd get a much worse picture sometimes.
Fair point. Volatility cuts both ways.
And Giustra forcefully states that gold's 3,000-year reign as the ultimate currency did not just officially end in August 2020 when Bitcoin started taking off again.
Right. He emphasizes gold's true value shows up against troubled currencies, not just the U.S. dollar.
Exactly. Cites examples like the Argentine peso gold up 28-fold in 10 years there, or the Turkish lira gold up 4-fold in 4 years.
So it depends on your benchmark.
Definitely. He points out gold performs exceptionally well in periods of high CPI, inflation, consumer price index, rising everyday costs.
Like the 1970s.
Yeah, the 1970s, yeah, when it went from $35 to $850 an ounce, a condition he believes North America will soon experience again.
So he sees inflation coming back strongly.
He does. And he insists Bitcoin has never been properly tested in a real financial crisis or a dollar crisis, and it behaves much more like a risky growth stock.
Okay, this brings us to another fundamental difference. Supply dynamics.
Mm-hmm.
Saylor argues gold, yeah, it's scarce, but it doesn't have a true ceiling on supply. Price goes up, incentive to mine, more goes up. Bitcoin, in contrast, hard limit, 21 million coins, end of story.
Right.
How does Giustra, Mr. Mining, defend gold scarcity against that?
Well, Giustra basically says Saylor clearly misunderstands the gold mining industry, like completely.
Okay.
He explains it takes 10 to 20 years from finding gold to actually producing it from a mine.
Long lead times.
Very long.
Right.
Ore grades are getting lower, and there haven't been any truly world-class discoveries in 30 years.
No worry. 30 years.
That's what he claims.
Yeah.
And he presents a critical statistic. Despite a 50-fold price increase over 50 years, global gold production has only doubled to about 3,000 tons a year.
Only doubled despite a 50x price jump.
Yeah, which is just a mere 1.5% annual growth in supply. So he firmly refutes this idea of infinite supply for gold. He says the real-world mining has built-in scarcity.
So it's not just price incentive for Giustra. There are real geological and logistical hurdles.
Exactly. Physical constraints.
Saylor, though, counters that gold is just a commodity. And like all commodities, its supply does increase with price eventually, requiring cartels, he says, to maintain stability.
He describes this damping feature. Rising gold prices trigger more mining output, sure, but also more recycling of jewelry, bankers shorting derivatives, and even governments selling or shorting their reserves to keep a lid on the price.
Okay, a more complex supply picture.
Then Saylor contrasts this directly with Bitcoin, which he calls a true scarcity. In his dynamic model, rising demand and price lead to miners buying Bitcoin, holding it.
Not selling it immediately.
Right. And governments have less motive or ability to manipulate its price down because they don't hold big reserves of it like they do gold. And he also makes that really compelling argument about energy. Gold mining costs, he says, $100 billion a year. Fossil fuels, labor, environmental damage.
Right.
Providing, in his words, zero security, transport, or audit service.
Zero. That's harsh.
Whereas Bitcoin mining, maybe $2 billion a year then, provides full security, transport, and audit services for the entire network globally, scaling to trillions of dollars of assets. And, he claims, even improving overall energy efficiency by using stranded energy.
That's a really powerful counter-narrative, isn't it? That Bitcoin mining isn't just securing the network, but potentially optimizing global energy use.
It's a key part of his bullish thesis.
Now, there's this common perception, right, that Bitcoin ownership risks are mainly about losing your private keys or getting hacked. Cyber attack.
The technical risks?
How does Saylor address those concerns? And how does he paint the picture of Bitcoin ownership, almost contrasting the type of owner for each asset?
It's interesting. Saylor describes gold owners as, well, cynical, conventional, less technical.
Okay.
They tend to diversify, allocate only modest amounts, maybe 10%. He cites gold advocates like Jim Rickards and Peter Schiff on this point.
Right, the traditional allocation.
Then he makes this striking point. Major gold mining companies, like Newmont and Barrick, they're maximizing gold supply and returning capital to shareholders. They're not hoarding gold themselves. Implying maybe they don't actually believe the price will go up significantly long-term.
Provocative.
In contrast, he portrays Bitcoin holders as maximalists, believers in technology as a force of progress. They're all in. He cites stats like 84% willing to mortgage their homes to buy Bitcoin.
Wow, that's poot of conviction. Or maybe something else.
He argues this viral spread of technology isn't a pyramid scheme. It's just, a better idea catching on.
Okay, that's a pretty stark contrast in the investor psyche he's painting.
Very stark.
Giustra, however, finds Saylor's description of Bitcoin ownership deeply problematic, doesn't he?
He really does. He raises serious concerns about whether the market is truly real because of what he sees as extreme concentration.
Concentration? How concentrated?
He claims 2% of owners hold 95% of Bitcoin's value, and that just 1,000 individuals control 40% of the entire market.
1,000 people control 40%.
That's his claim. He likens it to a penny stock promotion, highly susceptible to manipulation, especially with, fewer regulators watching closely.
That's a pretty damning critique, calling it a penny stock promotion. Does Saylor ever really address that specific concentration point directly? Or does he usually pivot back to broader adoption trends?
It's more the latter, typically. Giustra, meanwhile, is very skeptical of Wall Street and hedge funds getting involved. He names people like Gundlach, Druckenmiller, Paul Tudor Jones.
Big names.
Views them as momentum players. They'll jump ship quickly if Bitcoin underperforms.
Fair weather friends.
Perhaps. And he worries deeply about the, quote, millions of Robinhood-type buyers, less sophisticated investors who could be left holding the bag in a major downturn.
Right, the retail investors.
He publicly criticized Saylor's promotional style, too, called it misleading and filled with hype, and the use of terms like laser eyes and cyber hornets. He called that cult behavior.
Oof. So Giustra's really highlighting what he sees as fundamental fragility in both the market structure and the investor behavior around Bitcoin.
Absolutely. Legitimacy concerns are central for him.
Okay. Now, Saylor, switching back, argues that if God had designed gold without imperfections, he would have just designed Bitcoin.
Bold claim.
And that a global digital monetary network is an inevitable market force. What exactly does he mean by this inevitability?
Well, Saylor describes how Bitcoin is actually creating entirely new global markets, three main ones.
Okay, what are they?
First, in energy, where Bitcoin mining can make stranded energy profitable, rescuing renewables anywhere on Earth, basically creating a global price for energy.
Right. The stranded energy argument again.
Second, in money itself, creating open exchanges, developing yield curves on a network with rules but no rulers, as he puts it.
A decentralized financial system.
Third, in finance, allowing big tech companies like PayPal, Square, even traditional banks to sort of 10x their offerings by integrating Bitcoin.
So enabling innovation.
He contrasts all this with gold mining, which he says just keeps promoting the myth of gold as money while actually elevating the US dollar, using way more energy, and ultimately making gold less valuable.
It's a truly sweeping vision for Bitcoin's future impact, moving way beyond just being a digital asset.
It really is a total system change.
Giustra, however, challenges this as a utopian fantasy, right? He reiterates his garbage in, garbage out argument about Saylor's growth rates. Still thinks relying on those extreme figures is dangerous.
He's very consistent on that point, yeah. He emphasizes the critical importance of understanding asset correlations.
How assets move relative to each other.
Exactly. He points out gold's consistent negative correlation with equities and the US dollar historically. That makes it a crucial diversifier in a portfolio.
The non-correlated asset benefit.
And he highlights the March 2020 COVID crash as a key example. Gold went down maybe 8% initially, but recovered quickly. Bitcoin dropped a sharp 40% peak to trough, acted much more like a risky growth stock than a safe haven.
Sold off with everything else.
Pretty much. He stresses again, Bitcoin has never been properly tested in a major financial crisis or a US dollar crisis.
Still unproven in the fire.
And Giustra also directly challenges Saylor's view on inflation. He asserts that rising commodity and food prices are signaling real CPI inflation is coming or already here.
Okay.
And gold performs exceptionally well in those environments, making it, for him, the proven hedge against a weakening currency.
Wow. Okay. That really lays out the core of this monumental debate, doesn't it? Highlights just how fundamentally different these two perspectives are. And frankly, how passionate both sides are.
Absolutely.
We've heard passionate arguments, stark contrasts, some truly eye-opening statistics, about both gold and Bitcoin. It's clear these are two very different animals.
Very different.
Each with a compelling narrative and, well, significant implications.
Yeah, and this deep dive wasn't really about telling you what to buy, was it?
Not at all.
Instead, it was about equipping you, the learner, with the perspectives, the specific data points, the core arguments from both sides of this really important debate, understanding the contrasting philosophies, Michael Saylor's sort of technological imperative versus Frank Giustra's historical and geopolitical realism that's crucial.
Right here.
It reveals that the decision of where to store your value isn't just about looking at price charts. It's about deeply held beliefs, about security, control, the future of global finance, really.
So what does this all mean for you, listening, as you reflect on the insights we've unpacked today? Maybe consider this. In a world of accelerating technological change, shifting global power dynamics, how do you define sound money?
Is it that timeless physical asset? Gold, endured for millennia.
Or is it a digitally engineered network, Bitcoin, pushing the boundaries of what money can even be? The true test, as both Saylor and Giustra kind of suggest, might still be ahead of us.
Yeah, perhaps the most important takeaway isn't to just pick a side, right? But to critically analyze the risks and opportunities presented by both. Think for yourself.
Definitely.
The information we've shared today should hopefully empower you to ask more precise questions, dig deeper into the aspects that resonate most with your own financial philosophy. It's a complex landscape, it's evolving fast,
Sure.
but being well-informed, that's probably your strongest asset at the end of the day.